For regular IPO investors, you must have come across this terminology called anchor investors. Anchor investors are nothing but the IPO backers. When the IPO has to hit the market, the company who is coming up with an IPO has to select some of the companies or organizations who can back the IPO. When we say back the IPO, essentially buying the shares before the IPO, particular amount of shares or the number of shares before the IPO hits the market. That ensures that the company has the backing of big institutions, and this backing represents a strength of the IPO in the market. This particular support can be achieved by obviously the negotiation that happens between the IPO company and the anchor investors most of the times. But the major part that I want to tell you about is that these anchor investors dump their shares when the time comes, and after the IPO they dump their shares when the only thing is that SEBI does not allow them to dump them immediately on the day of IPO. The framework created by SEBI is as such that they can only sell these shares after 30 days, and that too only first 50% of the entire share pool that they have bought. Remaining 50% they can sell only after 90 days completion of the IPO. So this framework kind of safeguards the retail investors a little bit, at least, to not have a dumping of the shares on the day of IPO. But you will always see that after 30 days and the 90 days, you will see some institutional activity around the stock. So beware of these facts while you are investing in IPOs, while staying invested in the IPO stocks if you're not investing it for the IPO day again.